Welcome back to the deep dive. You know, I always find it really interesting when we get to kind of dig into Warren Buffett's wisdom.
Yeah.
It's like we're getting a glimpse into the mind of one of the greatest investors ever.
Yeah. It's pretty fascinating, isn't it? You know, he just has that way of taking these complex investing ideas and making them sound so simple.
Totally. And this time, it's not about his latest stock pick or anything like that.
Yeah.
You send over this article from the Motley Fool about Buffett's recent letter to Berkshire Hathaway shareholders. And guess what? He's talking about his mistakes.
Oh, yeah, that definitely caught my eye, too. You'd think after, hitting $1 trillion market cap that the letter would be all about celebrating those successes, right?
For sure.
But instead, he chose to highlight his investing mistakes. Kind of a different approach.
I know. He even put a number on it. The article said that between 2019 and 2023, he used the words mistake or error 16 times in his annual letters.
Wow.
That's got to be intentional, right?
Yeah, definitely. It's almost like he's saying, look, even I, Warren Buffett, make mistakes. It's just part of the game.
Right.
And that's a pretty powerful message for investors at any level.
It's definitely humbling to see someone like him, admit to making mistakes. I mean, if he can do it, it gives the rest of us permission to do the same.
Exactly. It takes the pressure off, you don't have to be perfect.
Yeah.
It allows us to actually focus on what's really important, which is learning from those mistakes and becoming better investors because of them.
So let's get into some of those mistakes. The article mentioned a few specifics, like his investment in Precision Castparts. He ended up overpaying for that acquisition.
Right.
Which led to a pretty big write-down. Basically, he's saying that the investment was worth less than he originally thought.
Yeah, it was a big one. And it makes you wonder, did he just get caught up in the hype of a hot industry?
Yeah.
Did he deviate from his normal valuation methods? It'd be interesting to kind of understand his thought process there and see what lessons we can learn from it.
Totally. It's one thing to say, hey, I made a mistake.
Yeah.
It's another to actually think about why that mistake happened.
Yeah.
And how to not do it again.
Exactly.
And that's what makes it a learning experience,
Right.
not just regret.
Yep.
The article also mentioned his investment in IBM stock. He admitted to being too optimistic about that one and eventually sold it at a loss.
Yeah.
It just goes to show that even the most brilliant minds can misjudge a company's potential.
It happens. And, it also shows that markets and industries are always changing, right? What seems like a sure thing today could be struggling tomorrow.
Exactly.
It really highlights how important it is to stay up to date, adapt to change, and recognize that even the most well-researched investments can still go bad.
And maybe the most surprising one of all was his admission about Berkshire Hathaway itself. He actually said that buying that failing textile manufacturer back in the day was a mistake. Can you believe that?
It's hard to imagine, right? I mean, here's a guy who built this huge business empire, and he's acknowledging that the very foundation of it all was a misstep. But it says a lot about his honesty and his willingness to learn from the past.
And it just proves that even what seems like a sure thing can really go wrong. In his case, it was that struggling textile business. What could that sure thing look like for the everyday investor, and how can we avoid those pitfalls?
Well, that's a great question. What's interesting here is that Buffett's early experience with Berkshire Hathaway actually teaches a very important lesson.
Okay.
The importance of recognizing what are called sunk costs and being willing to pivot. He realized that putting more money into a declining business wasn't the answer.
Yeah.
He had to shift his focus to something else.
Makes sense.
And for him, that became insurance companies, which, became the foundation for Berkshire's success.
So instead of holding on to a losing position, he had the foresight to cut his losses and move his money to a more promising opportunity.
Yeah.
That's got to be a tough decision to make, especially when emotions are involved.
It is. It takes discipline, and a willingness to admit you were wrong. But the payoff for making that tough call can be huge.
All right. This brings us to a bigger question. Why is Buffett choosing to focus on his mistakes, especially after reaching a $1 trillion market cap? You'd think he'd be celebrating.
Well, I think there are a few reasons for that.
Okay.
On the one hand, it shows his humility and transparency. He's not trying to pretend he's perfect.
Right.
He's showing us that even the Oracle of Omaha makes mistakes. And that's okay.
But it's more than just being humble.
Yeah, it goes deeper than that. He's not just saying, I make mistakes.
Right.
He's using these examples to actually teach us something.
Exactly. And that's what makes this so interesting for everyday investors like us. What can we learn from Buffett's mistakes? And how can those lessons help us make better decisions?
Exactly. That's what we're here to figure out.
Absolutely. We'll dig into all of that when we come back after a quick break. Don't go anywhere. So we know that even Warren Buffett makes mistakes. But what's really cool is that he actually owns up to them.
Yeah.
He uses those mistakes to teach.
Right.
It's like he's saying, don't just admire my successes, learn from my screw-ups too.
I like that.
You know, it's funny. When I first started investing, I was so scared of messing up.
Yeah, I bet.
I felt like every decision had to be perfect or I'd lose all my money.
It's a common feeling for sure.
Yeah.
We tend to think of mistakes as failures.
Right.
But in investing, they can actually be our best teachers.
Right.
The key is to have the right mindset about it.
Totally. So, instead of getting bummed out about a bad investment, we can ask, okay, what went wrong here?
Right.
What could I have done differently?
Exactly.
And how can I learn from this so I don't make the same mistake again?
Yeah, that's the idea.
So let's get practical here.
Okay.
What are some things we can take away from Buffett's mistakes that we can use in our own portfolios?
Well, one of the biggest things I've learned from him is to stick to your investment principles. Buffett has always said how important value investing is, focusing on companies that have strong fundamentals.
Right.
And a lasting competitive edge.
Right. The whole buy a dollar for 50 cents kind of thing.
Exactly. But sometimes even the best investors can get caught up in the excitement of a hot market or a really tempting opportunity.
Oh, yeah, for sure.
And that's where discipline comes in.
Okay.
It's so easy to let your emotions take over, especially when it seems like everyone around you is making money.
Right.
But, successful investing often means going against the crowd and sticking to what you believe in.
I guess that's where having a solid investment strategy is really important.
Exactly. Before you even think about buying a stock, you need to understand your goals, your risk tolerance, and your investment philosophy.
Okay, so let's talk about risk tolerance for a second.
Sure.
Because I think that can be a little confusing for some people.
Yeah, it is an important concept, though. Think about it this way. Imagine 3 different investors. One's really conservative, one's moderate, and one's aggressive.
Gotcha.
Each of them is going to be comfortable with different levels of risk.
So the conservative investor, they're all about protecting their money, right?
Yeah.
Even if it means they don't get the highest returns.
Right. They might prefer things like bonds or index funds.
Makes sense.
Now, the aggressive investor, they're willing to take on more risk to try to get those big returns.
Okay.
They might invest in growth stocks, emerging markets, maybe even crypto.
And the moderate investor would be somewhere in between.
Exactly. Maybe a mix of stocks and bonds.
Okay, cool.
And the key is figuring out where you fit on that spectrum.
Right.
There's no right or wrong answer. It's about matching your investment strategy to your own personal risk tolerance.
It's like picking the right hiking trail, right? If you don't like steep climbs in rocky terrain,
right,
you're not going to enjoy a tough mountain hike.
I like that. And just like choosing a trail, understanding your risk tolerance helps you avoid stress and make better investment decisions.
But even with the best plans, mistakes can still happen, right?
Of course. We're human. We're bound to make mistakes.
Right.
But that's where another important lesson from Buffett comes in, doing your homework.
Okay, yeah.
It's not enough to just follow the hype or a hot stock tip.
Right.
We need to really understand what we're investing in.
So, research the company, the industry, the competition.
Exactly. Look at the financials. Read analyst reports. Understand the risks and the rewards.
It's like buying a house, right?
Right.
You wouldn't just sign the papers without looking around first.
Exactly. You'd want to know if there are any problems.
Yeah, like a leaky roof or something.
Exactly. Investing's the same way. Don't be afraid to ask questions and get different perspectives.
Gotcha.
Challenge your own assumptions.
Okay, but let's be real. Research takes time.
It does.
And sometimes it feels like there's just too much information out there.
Yeah, it can be overwhelming.
Where do we even begin?
Having a process can really help with that. Start by focusing on a few key things that are important to you.
Right.
For example, you might look at a company's revenue growth, their profitability, their debt levels.
Yeah, and there are tons of resources online that can help us understand that stuff right.
Absolutely. There are websites, financial news sites, even videos that break down those complex financial ideas in simple ways.
So we don't have to become experts overnight.
Right.
It's more about learning the basics, being curious, and asking the right questions.
Exactly. And remember, even Warren Buffett didn't start out as an investing guru.
Right.
He was always learning, growing, and getting better.
It's encouraging to know that even the best are always learning.
Definitely.
But even with all the research in the world, sometimes things just don't go as planned.
It happens.
How do we deal with those inevitable mistakes when they do happen?
That's where learning from those mistakes becomes even more important.
Okay.
When you hit a setback, take a step back and figure out what happened. Don't dwell on the loss. Focus on the lessons you learned.
I've heard people say they keep a trading journal.
Oh, yeah.
Where they write down their trades and why they made them.
Yeah.
That way they can go back and see what they did and maybe spot some patterns in their behavior.
That's a great idea. It's like having a feedback loop.
Yeah.
It helps you see your strengths and weaknesses as an investor.
And it kind of ties back to what we were talking about with risk tolerance. If you notice that you're always making impulsive decisions or chasing hot stocks, maybe you need to change your approach.
Right. Being self-aware is so important.
Okay.
The better you understand your own investing style and biases, the better choices you'll make.
So we've covered a lot here, from risk tolerance to research to learning from mistakes.
We have.
But I'm curious, what's one of the biggest mistakes you see everyday investors making?
I think one of the most common mistakes is not diversifying their portfolios enough.
Oh, interesting.
You know, it's tempting to put all your money in one thing.
Yeah.
Especially if you really believe in that company or industry.
Right, especially when you hear those stories of people getting rich off one stock.
Yeah, but those stories are usually the exception, not the rule.
Gotcha.
Diversification is all about spreading your risk around.
Okay.
Investing in different types of assets, different industries, and different parts of the world.
It's like that saying, don't put all your eggs in one basket.
Exactly. If the basket drops, you lose everything.
So instead of trying to pick the next big winner, which is super hard, by the way,
it is,
we should focus on building a well-rounded portfolio that can handle the market's ups and downs.
Exactly. It's not as exciting, but it works.
Right.
It's proven itself over time.
Wow, this is a lot to think about.
It is.
But in the end, it's all about taking control of our finances. And making smart choices that match our goals.
Exactly. And remember, you don't have to figure this out all alone.
Right.
There's help out there.
Okay, cool.
Financial advisors, online communities, and even podcasts like ours can help.
Nice plug.
There's so much information available for anyone who wants to learn.
Awesome.
And that brings us to a really important point. The best investors are always learning.
I like that.
They're always reading, researching, questioning things.
It's like anything else, right? The more you know, the better decisions you make.
And Buffett is a great example of that.
Yeah.
He's still learning and changing things up, even after all these years.
So for our listeners who want to start using these ideas, what's one thing they can do right now to learn from their mistakes and become better investors?
Good question. I'd say think about a specific investing mistake you've made. Maybe you sold a stock too soon or bought into a company without doing enough research.
I've definitely done that.
It's amazing what you can learn by just thinking about those past experiences.
So we're turning our past blunders into future lessons.
Exactly. Once you've pinpointed that mistake, take some time to really think about it.
Gotcha.
What led you to that decision? What could you have done differently? And what's the biggest takeaway from that experience?
I like it.
And the more you do this reflecting and analyzing, the better you'll get at making good investment decisions.
So I think the big takeaway from this whole conversation is that mistakes are just part of investing. But they don't have to hold us back.
Right.
We can actually use them to become smarter, more confident, and ultimately more successful investors.
Absolutely. And remember, even the Oracle of Omaha has messed up a few times.
He has.
So be kind to yourself. Keep learning. Keep growing.
That's great advice. And that wraps up this part of our deep dive into Warren Buffett's wisdom on investing mistakes.
Right.
You know, it's funny. We always hear about these investors who crush it in the market.
Yeah.
And it's easy to get caught up in those big wins.
For sure.
But we don't hear as much about the mistakes they made along the way.
True. The success stories sound a lot better.
Right.
But the reality is, investing is a journey. And like any journey, there are going to be some bumps.
And as we've been talking about, even Warren Buffett has made his share of mistakes.
Yep. Even the best of the best.
But what's interesting is that he doesn't let them get him down.
Right.
He uses those experiences to make better decisions in the future.
It's a good reminder that mistakes aren't the end.
Yeah.
They're just part of the process.
Right.
And like I've been saying, the key is to learn from those missteps and use those lessons to become better investors.
So let's talk about how to keep those mistakes in perspective.
Okay.
Because I think it's easy to get discouraged, especially when those mistakes cost us money.
It's totally understandable to feel that way.
Yeah.
But remember, investing is a long game.
Okay.
Buffett himself said the stock market is a device for transferring money from the impatient to the patient.
So it's not about trying to time the market or make a quick buck.
Right.
It's about having a long-term plan and sticking to it.
Exactly. And one of the best ways to keep that perspective is to focus on the things you can control.
Okay.
You can't control what the market does.
Right.
But you can control your own actions.
So things like having a good investment strategy, doing our research, managing risk.
Exactly. And even if you make a mistake, it's not the end of the world.
Right.
What really matters is how you react to it.
Okay.
Do you let it derail you, or do you use it as a chance to learn?
This whole conversation has really changed my thinking.
Oh, yeah.
It's like instead of being afraid of mistakes, I can actually use them to learn and grow.
That's the right attitude. And remember, you're not alone in this. There are so many resources out there to help you along the way.
Okay.
Like financial advisors, online communities, and of course, podcasts like ours.
You got to get that plug in.
But seriously, there's a ton of information out there if you're willing to look for it.
And that brings us to a really important point. The best investors are always learning.
Mm-hmm.
They're always reading, researching, and challenging their own ideas. It's just like anything else, right?
Exactly.
The more you learn, the better decisions you'll make.
And Buffett proves that you never stop learning. Even after all these years, he's still adapting and evolving his approach.
So for our listeners who are ready to start putting all this into practice, what's one thing they can do today to start learning from their mistakes and become better investors?
I'd say think about a specific investing mistake you've made in the past.
Okay.
Maybe you sold a stock too early or bought one without doing enough research.
Oh, yeah. I've been there.
It's amazing how much you can learn by just reflecting on those experiences.
So we're turning those past mistakes into valuable lessons.
Exactly. Once you've figured out what that mistake was, take some time to analyze it.
Gotcha.
What made you make that decision? What could you have done differently? And most importantly, what did you learn from it?
I like it. It's about taking those missteps and using them to make better decisions in the future.
Precisely. The more you do this reflecting and analyzing, the better you'll get at making those smart investment choices.
So to wrap things up, I think the big takeaway here is that mistakes are just a part of investing, but they don't have to define us. We can choose to see them as learning opportunities and use them to become more informed, more confident, and ultimately more successful investors.
Couldn't have said it better myself. And remember, even the Oracle of Omaha has made his fair share of blunders.
Right.
So go easy on yourself, keep learning, and keep growing.
That's great advice. Thanks for joining us on this deep dive into Warren Buffett's wisdom on investing mistakes. We'll catch you next time on The Deep Dive.